Ladies and gentlemen, welcome to a new episode of the FinTech Hunting Podcast. We have an absolutely amazing guest for you today. She is an industry icon, a thought leader, a coaching guru, and dear friend. Please help me welcome back to the show, Christine Beckwith, founder and CEO of 2020 Vision for Success. Christine, welcome back.
Thank you for having me. It's great to be here today.
Well, it is great to have you. You have a wealth of knowledge and expertise. You've run production teams, you've climbed the corporate ladder, you've broken the glass ceilings, and now you're leading a whole coaching company of helping other loan officers. Talk to me about, before we dive into all of the coaching and everything, give me some of your observations of the current market conditions, right? I mean, you listen to one person and it's doom and gloom, someone else is happy. Where do you think it's kind of at? And then we'll dive into all of the coaching.
Yeah. Well, I'm glad you're asking me this particular question. One of the things I've always loved to focus on as a leader is helping loan originators focus on how to prepare for either where they are or what's coming. And so even in the consulting realm, for the past 6 years, I've had to be in lockstep daily kind of with the market changes. And so if you go all the way back to Q4 of 2021, when the rates come up for the first time and everybody's sitting on these big pipelines and waiting for the next day's rate fall, we can really lament looking back now that moment was pivotal. And I did not take long to look for the true economists, forecasters that are experts in our industry, to learn like kind of where we were going. And everybody was saying, this is where we're going to be. We're going to be here for a while. At that time, they were predicting a 6-month, turnaround into the spring. But getting loan officers to let go of the loans that were dying in their pipelines, to get them refocused on a different type of selling, into a higher interest rate, proved to be almost impossible for the first 6 months. Loan officers just were spending all of their time in the rearview mirror. They could not sell that higher rate. They didn't see the value in it because they had been servicing just to a lower interest rate request for 3 years. And that, as you know, would continue. The forecasters would miss the mark on that spring market. They thought for sure by June, and they predicted by fall, and it didn't happen in fall. They got a little more careful in 2023 when they were less likely to hit a monthly forecasted like, hey, we're going to see rates come down here. And then by 24, people just stopped predicting any rate reduction at all. And everybody was really starting to get into their seats. Here are the facts that I tell loan originators to focus on right now. And I will also add what I think is going to be happening this year to the best of my ability. Number one, we can count on how long a homeowner holds their mortgage. Historically, for 40 years, that average is 32 to 36 months. We know that if you were one of those wonderful people in the world, and 80% of Americans that own homes did this, and went out and refied and got that, 2, 3, 4% interest rate, that nobody wants to leave that. They are sitting there looking at their old payment versus that beautiful new payment they got. They don't want to let go of that. However, the circumstances financially in their home surrounding them over this 32, 36 months, now going on to 40 months for many of them that got in early on those low rates, it is a painful place for homeowners to be sitting. The bad news is, or just the facts, I would say, not bad news, but the facts are their debt has risen tremendously. The U.S. Debt has risen with it, and their cash position is depleted. So there are only so many acts financially that a homeowner has in their lifetime where they get a windfall of cash. And two of those have to do with us in the mortgage industry. One would be the sale of their home, where they get proceeds that they may or may not be rolling into a new home. And the second one is cash out during a refinance transaction. Because we've been at a stagnant standstill with everybody sitting on their low mortgage rate like they're laying the golden egg, those other factors are now creating incredible pressure in the home. And I would argue loan officers should be appealing in their marketing to those pressure points and also reassuring them. Like I'm saying to loan officers, don't, they're going to start, consumers are going to start with the interest rate inquiry. The question there really is, can I save money?
Right.
We don't want to be slimy about our answer or slippery, and say that the rate doesn't matter. We need to hit that head on and say, we understand why you're sitting on that low rate. We may never see those low rates again. That's the facts. I'm not afraid to say that because I am not the one setting the interest rates. I'm just running the mortgage industry. However, here's the good news. If you take a higher interest rate right now and you get in a better cash position and you get rid of that debt that is, making you suffer financially, and you look at your overall output and your financial risk position, we're going to get you in a really solid place. And we know that interest rates are going to come down in the future. We do not know when, but let's look at the facts there. This is where I'll start to predict the market and pivot from this a little bit, and I'll wrap it up in a bow in just a second. Sorry for the long-winded answer, but I hope it's really useful to the
It's
people
great.
listening. Um, we know a lot of things, and we don't know a lot of things. We cannot still predict interest rate reduction. We have a set of historical things that tell us when rates come down. One of those things was, when the job numbers came in. We could almost for 20 years know with precision that when, the job results were going to come in, this would be the impact, et cetera, et cetera. We knew that inflation would impact it. But we've been in this suppressed place, whereas the mortgage industry and real estate and American homeownership is in inflation, but the government preceding the current one was reluctant to call it that and address that and do the levers that we've seen, past treasuries like Greenspan do, that would affect immediate change and put some liquidity and some power back in with interest rates. We didn't see that with Yellen. We didn't see those commands coming. And I want to be careful not to get political. I'm stating facts that we
Right.
know. It has no party lines. It just is what it is. So we can't rely on things that we came to rely on. We could rely on Greenspan. We knew we would always do what would loosen up American homeownership. I think 8 times he lowered the interest rate artificially. And when I say artificially, not by natural economic means like inflation or those other things. And so, what do we know now that we can count on? Well, there's a new sheriff in town, right? And so we know that change is coming. We also can kind of dissect, the fact that this man is wealthy his entire life by real estate development and investment. He is an expert in that area, our president, President Trump. And so even if not for selfish reasons, he understands what that does to the economy, and he's going to have a very big focus on it. He has not said a lot in his short 4 weeks in this particular area, but he did just make some comments in the last 7 days that tips the hat to the fact that when I get these bigger things done, I'm coming for this, and this is what's going to happen. And he has said rates are going to come down. There's no prediction, people that are pessimistic about the ability or power to do that, I think are naysaying. And I think there's probably some disbelief because it's been so long that it's really coming.
Right.
For originators right now, what I'm saying is don't try to interpret and get on your social media and give political information. Number one, stay away from any political banter that's negative or positive, irregardless or regardless of what party affiliation you have. It's just bad. You're going to offend some part of your database or your followers no matter what. You don't know who they are. They could be good friends, but stay away from that. However, I did suggest in my weekly blog that I just put out this week that you follow, and I named some people. I named Housing Wire. I named Barry Habib with MBS Highway. I named Hammer Helmer with Originator Success as some places they can count on some really objective economic advice that will allow them to kind of unpack it. So, where are we? We know change is coming. We are closer to the boom again than we've ever been. We know one thing: a bust follows the boom,
Oh,
and we know the boom follows the bust. And so we are 40 months into a bust, with a new sheriff in town that has a focus on creating wealth, liquidity, and things like that. We are closer than we've ever been. So what can we do first and second quarter right now? I think we can get in front of our databases. People want to be in a better financial position to catch the lowest possible interest rate when that moment comes. If you have high debt and you have no cash, you are not in the position you were to get the best possible rate.
Right.
If we do 2 transactions for them at a nominal cost and we roll those costs in and finance them right now, and we give them cash and we lower their debt and we get their DTI in a great position, when that comes, and we know it needs to be 6 months, right, from the time of that transaction, but when those lower rates come, they're going to be in a really good financial position to get the absolute best thing. Never mind the compounding effects when you're in a better risk position. You get better car rates, you get better credit card loans, you get, you have cash for emergency
Right.
situations. And so that's it. That's my advice. And dust off your database. Be the one they remember when this happens. Don't, a lot of people gave up marketing, and, it isn't going to be the right time when the rates hit because everyone's going to be after those people. You need to be the name they remember when that hits, that you were here during the downtime thinking of them as their expert mortgage person.
Great backdrop, and that was very insightful. I greatly appreciate that. So, from there, what's holding up loan officers now? I've seen statistics. There's 50% less loan officers now than there were 2 or 3 years ago. So these are typically the people that are in the industry now. They're more of the survivors. They're more of the people that are committed to the industry. What are some of the biggest challenges they're facing? Why aren't they dusting off their database, or where are some of the fails that they're having on social media and really not getting the traction that they need to get?
Yeah, I just think this has to do with how long it's been at a slower pace with less reciprocation. You can only pour so much money into a low return, which is where we've been for 3 years. I think these people had lifestyles, not everyone, but I think for the most part, even if you're a mortgage person, a mortgage loan originator that hadn't been here for 20 years, if you were reaping the financial benefits of the previous market, you were living large.
Right.
And, everybody's kind of had to consolidate. Hopefully, us old birds always save the acorns when the waves come, and I'm grateful also for my own company that I was smart during the windfall and banked capital so I could carry this company through the last 3 years. I'm not ashamed to say, like, I'm old enough and wise enough and been doing this long enough to know that. And I was giving that same advice. So I think if financial stress existed in those places, that really they made sound decisions to go get daytime jobs. They'll come back, a lot of them. We can sit here and naysay, those LOs that come and go with the refi booms, but it's just always been the case. And by the way, we need more people when we get into refi booms,
Right.
because we drown in those markets, and we can't really shovel fast enough. The storm's dumping too much, and too long. So that will be a great problem to have this year and the next year. But for everybody that's sitting here right now that stayed through the storm, that did save the acorns, who are beg, borrowing, and stealing through this market, get in front of your database. Be loud in your social media. Let people know you can solve the problem of today and tomorrow, both. There doesn't need to be an either or proposition. You don't have to wait for the lower interest rate to get out of financial pain right now. We have to speak confidently, directly, believably. We need to believe ourselves that we're helping even when we're not lowering an interest rate. And I do think a lot of loan officers, unfortunately, haven't lived through rising rate markets. I've been doing this 37 years, and there's only been 8 markets where the rate was going down for greater than a 12-month period of time, which is crazy when you sum that up.
Right.
That means 29 years I was selling into a flat or increasing rate market. So people that are from our era of veteran level mortgage expertise, we cut our teeth on markets like this. This market doesn't scare me. I understand the consumer needs to warm up, or has needed to warm up to receive what I'm saying, but they are hot now in this situation. They are in the hot seat financially. And I see tons of loan officers taking my advice, taking 2020's advice, reaping the benefits. They're closing 12, 15 units a month now the increase that I've seen in the last 6 months with these same tactics that weren't working a year ago is mind blowing. So, it's time to get out there and know that your return's going to be higher right now. It really is.
So let's talk about the importance of coaching. I think it's one of those things where when things are good, people say, okay, maybe I'll get around to doing it. When things are tough, oh, well, that's just something I can cut. I see people cut marketing when markets are tough. And I had a CEO on a couple of weeks ago, and they said, Michael, you can't cut your way to growth. You got to question everything. You've got to be fiscally responsible, but you can't cut your way to growth. Talk to me about the importance of coaching in a market like we're in right now.
Yeah. Without sounding self-serving, I always make the joke that, people that don't come to time management because they don't have the time, and people that don't spend the marketing money because they can't afford it because they're not doing well. Those are the people that are missing the point. I think the word coach and coaching is just overrun. There's a dime a dozen. I go on social media and I see 50 people, that are promoting being coaches. I've been around a long time. I know a lot of depth within the industry. I don't necessarily poo poo new incoming coaches. I think everybody that is good at it and has experience and expertise to share. I think there's plenty for all of us. I've always had an abundant mindset. But there just is a real OG thinking. Like, what are the staples of your home and mine? Well, for me, it's a gym membership. I don't, quit gyms. I've always had them. I've been a steady gym goer all of my adult life. And so no matter what, I'm always going to pay that fee. And I know coaching and consulting can be really, really expensive. We, I don't mind saying, have been an extremely affordable place for people to receive high end coaching and consulting. So much so that I've drawn a lot of vocal dismay from my competitors who have sat me down and said, you're watering down the value by offering this price set. However, most of them have adapted to my price set over the years recently, understanding that I was always playing a bigger game in the masses. I always felt like if I could have, 5,000 people paying lower tuition, I would group that up, use that as overhead to bring in the resources for them at no additional cost. If you're gouging the loan officer when they're at a high point income wise, when they're at a low point, you're setting yourself up for the quitting.
Yep.
And so even though we've shrunk, of course, with the market, I don't think we've shrunk to the degree that other of my competitors have. Because the first thing you're going to cut is what you see as luxury. And unfortunately, coaching is, like going to the hairdressers or the spa. It's a self help type of thing. It is when we are, practicing those things, that's how it's seen. There are people, I have no doubt, that are here coaching with me that can't afford it, that are making it a priority, that understand its value, that figure if I spend these few $100s or whatever tuition level they come in at, they kind of sit and think, where do I spend that if I'm not coaching? Well, I mean, I don't know about you, but on a Saturday with Starbucks and an hours of shopping, I could be spending my coaching tuition pretty easily, add a lunch on there, and I'm over that number. And I'm not getting the ROI, that I would be if I sat in a class and got one nugget that moved the needle by 10% of my business. And so I don't spend a lot of time trying to convince people to coach when they come and say, convince me to coach, because I say, convince me why I should coach you.
Right.
Because I am looking for people that get it, want to stick with it, want to see profound change, breakthroughs, and development. The last thing I'll say on this is I am 55 years old. I had the blessing of being raised by some incredible elders, my great aunts and uncles, my grandparents, who were always learning. The thing that impressed me most is I would find them reading books, always in their 70s and 80s, watching documentaries on television and going, huh, at 82 years old, like they were learning something new. My father is a just incredible reader, writer, person that's always seeking education. I see myself the same way. When I go to conferences to speak, I usually sit in the audience the whole day. Am I hearing things I've heard before?
Absolutely.
Absolutely. Is it hitting me in a different way?
Yeah.
Yes, because just like every time we sit down to eat or we get up in the morning to get dressed, we feel different at every meal and every morning. And that mood or desire for what we want to eat or dress like is the same in how we receive information. I could watch the same movie and take away a different lesson the second time because all the variables have changed. My needs have changed. So I am a lighthouse in the industry for mortgage professionals. I've chosen to commit myself with great purpose to this. I left a high paying job that I could still go back to or back into the field directly and manage. I'm not so old that I couldn't do it. And believe me, I've thought about it the last 6 years. But I really came to a place in my career where I felt like I had amassed enough expertise. I wanted to write books. I've written six in my 6 years of being semi, retired out of direct management. My life is filled with purpose. Every day I am blessed with gratitude that comes back to me for the answers we provide. I feel like I'm doing really good work. I have a decent work life balance, and I'm really dedicated to what I will say is state of the art education. Our curriculum changes every single
That's right.
quarter. We do not get stale. Our lessons change. We tell them what the lessons are. People have the ability to plug their businesses in whatever way. I would put my platform up against every single one that's in the industry and tell you that it is deeper, broader, more vast, and more customizable than any other platform in the industry. We have a bank of 50 consultants and coaches that are extreme veterans and experts in our field. I mean, we really have something incredible, and it really is affordable. And so I know that sounds like a pitch and self-serving. Maybe it is. Maybe that's part of my sales expertise. Ask for what you want. We have a seat for you. We would love for you to be with us, Michael. I'm grateful that you're with us and you're one of the people that get to administer impeccable education to wanting and needing businesses. We should be very proud of the work that we've done, even in these tough years, because they've needed those lighthouses.
Well, and thank you for the opportunity to be a part of this. It's passionate coaches that have knowledge and expertise that truly are committed to adding value. That's why I'm glad to be just a small part of that and love working with the community and with the students. Christine, as we wind down, short answer on this one, but you mentioned Lighthouse, and one of the divisions is also Lighthouse Advisors with fractional expertise. It's an area that I'm very passionate about. Tell me briefly about Lighthouse Advisors.
Yeah. So I have been working with Laura Brandeo for many years in many different facets. Short answer is we decided a year ago to come together and open a company called Lighthouse Advisors, which is a consulting firm. And you can get anything at this consulting firm. What we really want to be is the Angie's List for an industry that's not going to go back together the same way. Just like COVID made people not keep their brick and mortar offices, banks, mortgage companies, correspondent lenders, and brokers, large brokers, they weaned their executive level teams down to save money during these lean times. And when they go back together and the production starts to come back in again, I don't see them reinstating those $500,000 executive positions. Not when Lighthouse Advisors is going to offer compliance, financial forensics, everything that you can possibly think about. Even if it's like trying to help you find an investor, or if it's trying to help you, implement a new channel, maybe you're retail lending and you want to add wholesale. Well, we can help you do that. And so there's just so many things we can do. It's fractional. It's really pennies on the dollars of what you would spend hiring a full-time person. And I would argue with more power because you are hiring us to be experts with great accountability and great oversight. So I hope people find us. I will add one more thing.
Sure.
We did also build a company called MLL Force. It is a continuing education company. It just seemed in lockstep. Nathan Nottingham is the CEO of that company. It went live the middle of last year, and I'm really proud now that anybody that is working with us can get their continuing education in all of the states, and they don't have to go anywhere else to get it. So that's
Christine,
there
you are
too.
welcome back anytime. You and I could talk for hours. I love the passion and how committed you are to really educating our industry and helping them move the industry forward, whether it's with the coaching, whether it's with fractionals, with Lighthouse, whether it's getting the continuing education credits. It's always with a committed to how can you help other people rise up. And I couldn't be more honored to be a part of that with you on this journey. We continue to roll up our sleeves and give back to the students. If people want to find out more about any of those companies, divisions, what's the best way they can get a hold of you?
Yeah, I'm going to give my direct email, and I'm also going to give my website, Christine at visionyoursuccess.net for a private conversation. And then visionyoursuccess.net is going to bring you there, and all of our companies and channels are listed there, as well as what we do. So thank you so much for having me today.
Oh, Christine, thank you. And everyone, this is another episode of the FinTech Hunting Podcast.